You know what it is. That's right. It's time to talk money with your money nerd and financial coach. Now, tighten those purse strings and open those ears. It's the Money Talk with Tiff podcast.
Hey everyone, I'm super excited because I have Bronson Hill on the line. Now, Bronson's here to talk to us about inflation, which is a huge buzzword nowadays. And so I just wanted to dig into it and then just think about ways that we can use this to our advantage. So, hey, Bronson, how are you?
Hey, Tiffany, really excited to be here. I love talking about ways to, profit from challenges and opportunities. So I think there's a lot of people interested in talking about inflation and investing and how we can actually do well during this time.
Yes, this is very timely. So let's just start with first explaining what inflation is, just in case we have some audience members that aren't sure what that word even means.
Yeah, that's a good question. Yeah. So inflation really just means we're seeing, I think everybody understands that, hey, I'm going to the supermarket and things are costing more, right? The stuff that I bought at Chipotle that was, $7 for a chicken burrito is now $10.50 or whatever. It's just inflation, just things are costing more. Now, inflation is generally caused by one of two things. It's either caused by printing more money or creating more currency. A lot of times they don't even actually print money. They just add zeros and ones on a computer screen, the Federal Reserve, and it adds more currency, or they send checks out, this type of stuff. So when there's more currency available, there's the same number of goods that are out there, right? So if there's only so much services and goods that are available, the more currency you create, the more everything costs. So that's one way to create inflation. The other way is to reduce the amount of goods and services that are out there, which we saw really during COVID, right? People stopped going to work. They stopped, certain things. There's a lot of supply chain issues that have come up. So you basically now you have a situation where you have way more currency. There's actually a 40% increase in the amount of currency over a 2-year period, which is just kind of hard to believe, right? That all this new currency was created between 2020 and 2022, and you have less goods and services because of COVID. So that's just the recipe for just sustained perpetual inflation, and that's why we're seeing it.
Yeah, so we just had the perfect storm going on.
Yeah, really, we did, and it's and I'm sure, and so I guess everybody hopefully can understand as prices are rising, and we've seen it, over the last over 100 years since 1913. Was the year the Federal Reserve was created. We didn't actually have a central bank for a long time in the U.S., but they have, the dollar has lost its purchasing power at 99%. So stuff that cost, a penny over 100 years ago is now $1. And it's not just because things just have to go up. It's because of this continual creation of new currency.
Very, very interesting. So hopefully that explains inflation to our audience. But now that we know what inflation is, and we know that we're currently living in high inflation times, what are some ways that we could take advantage of this situation to where it's not just killing us? We can actually make some money from it.
Yeah, so it's always interesting, and anything we see that's a challenge in our lives or something that we face. Obviously, when we're filling up at the pump and it's costing $100 where it used to cost $40 or whatever, we're seeing these type of things. That's where we feel the pain of it. But there are ways to actually get on the other side of the equation where you actually can use it to your advantage. So how would you do that? Well, I actually wrote an ebook about this on my website. I can kind of give some details about it later. But basically, it talks about when we can actually own assets that produce cash, or they just have perpetual value, no matter how much currency is created. So, for example, you can invest in oil companies that actually go and get more oil out of the ground. And so instead of, when gas prices go up, it's actually a positive for you rather than a negative, right? So then you're actually on the other side of that equation. Another way is through buying a business or buying real estate. So if I own real estate, there's actually a couple advantages there. By owning real estate, typically I have, especially on single family houses, many people have a debt that's 3%, 4% or less, and it's for 30 years. Now, inflation officially, at least at the time of recording this, is 6 or 7%. But it actually, in my opinion, I think it's actually closer to 12 to 15% or higher, just because they don't really report things necessarily correctly. And if people knew inflation was 10 or 15%, they would probably a little more freak out. And so they actually, that even just some of the integrity in the reporting isn't as good. But one of the advantages is if you can borrow at a low rate. So again, I can buy a house at a lower rate for a long period of time. There's a few advantages there, right? Because if I buy a house, I only put 10 or 20% down. The house appreciates over time. Let's say it appreciates 10 or 20%. Well, I haven't had a 10 or 20% increase in the value of how much I invested. I've actually had a 100% increase, right? Because I used leverage, I used other people's money, I used a loan to be able to buy this, right? So when you're able to get debt at a lower long-term fixed rate and be able to buy an asset that you know will be worth more in the future, you actually get to benefit from the rise in prices exponentially, right? So that's a big advantage of real estate and things like that. And also, when you're paying it off in future dollars, those dollars are actually worth less, right? Because of inflation, because they keep creating more and more and more currency. So if you, hey, would you rather pay off this whatever debt or bill now, or would you rather pay it off in 5, 10, 20 years? I'd always take the longer way, because the dollars will actually be worth less at that point.
Yeah, that's a very interesting take. And I completely agree. I mean, I bought my house in 2017, and then I just refinanced when right before they started raising rates.
Yeah,
And
good.
so,
Yeah,
my interest rate is like 3.75 or something right now. So it's
amazing.
super low. But now that they're starting to raise rates, with the Federal Reserve raising rates and stuff, is it still beneficial to go ahead and lock that in?
Right now, at least as we're recording this, rates are a bit higher, but I still think there are opportunities out there. It's just you have to find deals that make sense for you. One thing that we're seeing, we have our businesses, we have multifamily apartments. We've got about 2,000 units, mostly in Florida and Georgia. And in my opinion on this, and we look not only at real estate or specific assets of what's happening in oil and gas or what's happening in real estate. We're looking at what's happening in the overall economy, what's happening, and where are things headed. So my opinion on this is that rates are obviously they've increased very, very sharply. It's slowed down the real estate market. It's slowed down a lot of things, and a lot of lenders that are lending money don't really want to lend right now. Because if I lend at 6%, all of a sudden the rates rise and now the going rate is 7%. Well, as a lender, I've actually lost money, right? Because I could have lended it later at a higher rate. So my thought is, once rates start to stabilize, meaning they stop raising them and they maybe just even tick down just a little bit, maybe 0.25% or half a percent as far as the interest rate, I think a lot of lenders will come back into real estate. I think a lot of other investors will come back into real estate. And so I think there are deals that make sense in every market. I've just seen a lot of investors kind of pause right now because they're like, I don't really know what this looks like. So I do still think owning assets. I mean, to me, there are other assets that we do, such as ATM machines and car washes and oil and gas deals that you're owning real physical assets. So you're outside of Wall Street, which is great. You're able to cash flow with these investments. And there is a built-in inflation hedge, and what that means is it's not like a bush in the yard that grows over time. It's basically like an inflation hedge is something that the rents will rise over time, or the value of the oil, or the value of how much the car wash is charging. These things, they rise with inflation, right? And so again, if you could just get into assets that pay you to hold them, and they have some element of being able to rise with inflation, either the value of the asset itself or in the value of what the service they provide is able to raise rates over time, then you're going to be more protected than sitting in cash, right? If you're sitting in cash, you're going to get penalized. If inflation really is actually 15%, that means if somebody has $100,000 in their retirement or in their savings account, they could be losing $15,000 a year. Now, it doesn't mean they're losing it. It's like it goes down every year, but it means that what that is actually going to allow you to buy is actually less and less and less.
Well, let's get into that. You kind of segue right into where I wanted to go, which is if it's outside of real estate. So you mentioned like ATM machines, car washes. How would we get invested into things like that if me or a listener, someone was like, hey, I really don't want to buy real estate right now, but what are these other options that you're referring to?
Yeah, so I think the other options when it comes to investing and just that's a question too of I keep coming back to is well, what is the opportunity and how can I get involved in this? The first thing that I think a lot of people think is just, well, I don't know how to do that. I don't know how to invest in ATMs or car washes or to buy. We even do physical precious metals. Like, why do you do
Mm,
these certain things? And so the first thing that the first investment we can make really is in our own education. So that's what people are doing when
mm.
they're listening to your show, right? They're really getting educated and learning how do I grow my wealth over time. And so one of the best ways to do that is most, mid-size or large cities in the US, there are investing meetups or real estate meetups you can go to and you'll learn. And a lot of times I've heard there's actually a great book out there that I've read a couple times. It's called Rich Dad, Poor Dad. I don't know if you've read this book,
Mm.
Tiffany, but it's one of the best-selling personal finance books of all time, and I recommend it to everybody. But basically, the author talks about the difference between people that are poor and the people that are wealthy. A lot of times, it's just simply in their vocabulary. It's simply in the words that they're able to use. So if I understand what an asset is, I understand what cash on cash return, cash flow, internal rate of return. I understand how my tax, how to reduce taxes and these type of things. That really grows my ability to earn more or to pay less in taxes or to grow wealth. And so by going to meetups, by going to conferences, by getting into books, I do audiobooks, shows like yours, podcasts. These are all ways that we can really learn to grow our wealth. And I really think there's a huge correlation between investing in yourself and then really growing in how you're going to be able to do it. Because everything sounds foreign, everything sounds weird until you actually learn about it. And maybe you meet somebody also that has done it. And then you're like, oh, wow, I actually learned from this person. This is how I could do this. And so then everything that was impossible or sounded weird and crazy is like, oh, this actually is possible.
And I did not pay Bronson to say that, but that's exactly what this podcast is all about. It's just to spread ideas because you don't know what you don't know, right? And so
Yeah.
if somebody's listening to this and they're like, oh, I know what inflation is, now they can step into those rooms and be like, yeah, and inflation was da 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 da, and they can
Yeah.
start speaking the language. And it does matter, when you step into rooms or even if, because I had a situation where I was selling my car. And I, of course, knew what I was talking about. I did all my research and everything. And the guy was like, we usually take advantage of people. And I'm like, I didn't believe that he like actually
Right.
said that to me, but he did. It was a salesperson. He was like, when people come in here not knowing what they're
Yeah.
talking about, not doing their research, we usually can take advantage and we do. And I was just like, wow. So like Bronson just said, make sure you get educated. And that's what we are here to do. So
Mm.
if there is someone, AKA myself, that's like, okay, I have all the basics down, financial education, financial literacy, and I'm interested in maybe, let's say ATMs or no, let's say a car wash, right? How would we
Mhm.
evaluate, situations like that? Because I've even heard people say, laundromats are good. For me, I'm kind of on the fence with those because I'm like, it seems like it's a lot of liability. But,
Right.
laundromats, car washes, ATMs, how would we even start with the research to start one of those endeavors?
Yeah, so I've actually got a book coming out soon. It's
Oh.
called Fire Yourself, and just basically how to develop streams of passive income. And they really, when it comes down to analyzing deals, I feel like real estate deals are usually the easiest to understand initially. And when it comes to passive investing, a lot of people think, oh, I should be doing real estate, so that means I need to buy a rental house or I need to buy a vacation rental because most people have lived in houses or we're familiar with it, right? So, oh yeah, I own this one, I could own another one, right? And in a way, I think it's kind of a trap because a
Mm,
lot of times you don't really end up with much cash flow, or if you do, you're putting in a lot of work into it. And even then, we undervalue our time. So I used to work
mm,
with a lot of physicians in a previous role where I would do consulting in the medical field, and all these people that would buy one, two, three houses, or they'd buy a duplex, and they'd be out managing themselves. And I'd be thinking, man, your time is so much more valuable than I mean, if they're making hundreds of dollars an hour at work, they probably shouldn't be the ones that are actually managing, this property, right? And so even if somebody's not making, a lot of money, I think, being able to learn how to evaluate deals that, really can grow your wealth without taking up more of your time, then it becomes scalable, right? And we know people, maybe someone listening is somebody who's does really well in their job or in their business, but they're looking to scale their wealth. Well, one of the biggest ways, I kind of have these three things that I go over. The first one, it's like a funnel, and it's the largest one, is the market, right? What is the market that this deal is in? And it could be, we buy a lot of multifamily apartments in Jacksonville, Florida, right? So that market has, a growing population. It's got, job growth, income growth. It's landlord and business friendly. There's 1,500 new people moving there every month. There's a lot of things to love about it, right? So there's a growing market with a lot of things. Well, how does that look in the ATM space? Are people using? A lot of people don't realize that as digital as we're becoming, the number of transactions in the ATM space has actually doubled in the last 20 years, right? So people don't realize we're becoming more digital. We're also using way more cash. And so, so that's the market. Then you look at the second one is kind of as you come down the funnel is who's the operator? Who's the person that's doing this? Who's the team that's doing this? Is there somebody on the team that's been doing this for 5, 10 years or more? And, when you talk to them, do they admit, hey, these are the challenges we've had? Or is it, oh, this has always been perfect? Or is it their first one they've ever done? So again, those are much more risky if it's the first one they've ever done, but is it kind of a rinse and repeat? Like, hey, we've done this in this market in this way. Here's the challenges we have. Here's what we've learned. Here's our track record, whatever. That's awesome, right? And then you get down to the actual deal of, what are the terms? Like, well, when do I get my money back? How much is the return? Is there any tax benefits? Things like that. So every time, you look at one deal, it kind of can feel a little overwhelming. But once you start looking at a lot of deals, you start to kind of speak the language of it. And you realize, like, oh, okay, like I understand. Like most deals have some risk. Usually there's one or two primary risks. You say, okay, well, if this didn't work out, what's the one or two ways that this wouldn't work out, right? And it's usually comes down to the team not being able to operate it, or some risk in the market or something like that. So you have to kind of figure out and say, okay, well, based on what I know, does this make sense? And then again, I'm not going to stay if I only have $100,000 to invest. I'm not maybe going to put it all in one deal, right? Maybe I'll spread it out in different deals, or I'll use some diversity just in case maybe the ATMs goes great, but this real estate doesn't go as well, or just there's some diversity. But I think I really learn by reading and by talking to people, but I also learn by doing. And so when you actually start taking action, and it really works best if people have a fair amount to invest, and then they can put a little bit into a deal and just get some experience, because that's when I start paying attention, right? If I actually am invested in something, I'll pay attention to actually what it is.
I love that. I love that. Learn by doing. That's
Yeah, yeah.
definitely, definitely. So, Bronson did not pay me to to tee him up with the book, and I didn't even know that that was a thing. So when he said that, I don't know if you all heard it in my voice. I was like, "Oh, like there's a book for this." So tell us more, Bronson, about where we could find this book if we're interested in these passive income ideas and how to get started.
Yeah, so we have I have the ebook for free at my website at bronsonequity.com. It's called How to Use Inflation to Your Advantage. I do have a full-length book coming out in the next few months, but it'll probably be on Amazon and elsewhere. But if you do go download my ebook, you'll hear about the book coming up. But yeah, I love connecting with individuals. We do work with some investors to do these type of deals. So if anybody's interested in joining our investment group, we have opportunities that come up here and there. And then we also just try to provide, just like yourself, a lot of education in the space so people can understand, like, how do I analyze a deal, or how do I have financial goals that make sense, and how do I really move forward? And a lot of it is mindset, right? I know you've done a lot of great things in your life because of having the right mindset. Say, this is what I'm going to do, and this is how I'm going to get there. But I've realized that's a big part of it as well.
Awesome, awesome. And a quick question. In order to join your investment group, do you have to be an accredited investor?
We have some deals for both accredited and non-accredited investors. Excuse me. So we have a variety of deals. Some of them are alternative stuff like ATMs and car washes and stuff like that. It is more accredited only, but we do have some that are for non-accredited as well. So that just means, for those who aren't familiar, it depends on your net worth or income. If somebody's higher net worth or higher income, they're considered accredited. But we do have deals for both.
Awesome, awesome. Well, thank you so much, Bronson, for dropping all these gems on the podcast today. Now, if people were interested in finding out more about you, or maybe following you on social, how would they find you?
Yeah, you can just find me at bronsonequity.com. I'm also on LinkedIn and Facebook and all the socials. And I love connecting with individuals. If anybody has any questions or wants to talk investing, you can reach out to us on our team. We'd love to be able to connect with you and provide any resources or opportunities we can.
All right, perfect. Well, I will have all of those links in the show notes. So if you're doing something else and multitasking while you're listening, don't worry. Just check the show notes and everything that Bronson said will be there. I'm about to go on his website and download this ebook because I'm curious. I don't know about you, but I appreciate you coming on the show today and dropping these gems for the audience. And I hope you have a wonderful rest of your day.
Thanks so much. I appreciate you having me, Tiffany.
All right, bye.
Thank you for listening, joining, and being a part of the Money Talk with Tiff podcast this week. You can check Tiff out every Thursday for a new Money Talk podcast. But if you just can't wait until next week, you can listen to previous podcast episodes at moneytalkwitht.com or follow Tiff on all social media platforms at Money Talk with T. Until next time, spend wise by spending less than you make. A word to the money wise is always sufficient.